नमस्ते दोस्तों, आपका वैल्यू एजुकेटर चैनल में स्वागत है, जहां आप सीखते हो स्टॉक मार्केट में इन्वेस्ट करके आप कैसे पैसे बना सकते हो। तो मेरा नाम है शशांक और आज मेरे साथ वरुण है। तो ये वीडियो में हम डिस्कस करेंगे इन डिटेल अबाउट नेचुरल कैप्सूल्स का बिजनेस मॉडल क्या है। ये जो कंपनी है वो कैप्सूल्स का मैन्युफैक्चरिंग करती है, सो इट माइट बी द प्रॉक्सी प्ले फॉर द फार्मास्यूटिकल इंडस्ट्री। तो ये जो बिजनेस है वो कैसे शुरू हुआ, क्या क्या अलग अलग प्रोडक्ट्स वो मैन्युफैक्चर करते हैं, कंपनी आगे जाके एपीआई का मैन्युफैक्चरिंग भी करने वाली है। तो ये सब के बारे में हम ये वीडियो में काफी डिटेल में डिस्कस करेंगे। मैंने इसके अलावा वैल्यू एजुकेटर चैनल पे काफी अलग अलग डिटेल वीडियो क्रिएट किए हैं, फार्मास्यूटिकल इंडस्ट्री, केमिकल इंडस्ट्री, एग्रोकेमिकल्स या इसके अलावा बैंकिंग सेक्टर, बहुत सारे वीडियोस मैंने क्रिएट किए हैं। तो आप ये जो सारे डिटेल वीडियोस है वो जरूर देख सकते हो, और यदि आपने अब तक वैल्यू एजुकेटर चैनल को सब्सक्राइब नहीं किया होगा तो जरूर इसे सब्सक्राइब भी कर सकते हो। तो अभी हम डिस्कस करेंगे कि नेचुरल कैप्सूल्स का क्या बेसिक बिजनेस मॉडल है, क्या क्या प्रोडक्ट्स वो मैन्युफैक्चर करते हैं एंड आगे जाके उनका फ्यूचर में ग्रोथ का क्या प्लान्स है। तो वरुण, कैन वी जस्ट स्टार्ट विद द बेसिक उनका क्या बिजनेस मॉडल है एंड क्या प्रोडक्ट्स ये कंपनी मैन्युफैक्चर करती है।
राइट। सो नेचुरल कैप्सूल्स, ये जो कंपनी है ये एम्प्टी हार्ड कैप्सूल शेल्स बनाती है जो जेलेटिन के बनते हैं। तो आपने अगर कैप्सूल का दवाई अगर खाया होगा तो उसका जो बाहर का शेल है जो जेलेटिन का बनता है वो नेचुरल कैप्सूल मैन्युफैक्चर करता है और फॉर्मुलेशन कंपनीज को बेचता है। तो ये जो हार्ड कैप्सूल शेल है वो फार्मास्यूटिकल्स में भी यूज होता है और न्यूट्रास्यूटिकल्स में भी यूज होता है। सो नेचुरल कैप्सूल्स का प्रोडक्ट आप देखोगे तो इट इज नॉट एग्जैक्टली अ फार्मास्यूटिकल कंपनी, but it is sort of like an ancillary to the pharma company, wherein they don't have like the hard regulatory requirements that like a formulation company or an API company will have, but they still need to have like good manufacturing practices where their facilities are audited by their customers to make sure it meets their standards.
Right.
So Natural Capsules is the second largest capsule player in India. And they were actually the first company in India to launch HPMC capsules, which is a vegetarian capsule that is made from wood pulp. So gelatin जो चीज है वो animal sources से बनती है, and HPMC is actually a vegetarian variant of capsules, which also Natural Capsules manufactures. So apart from hard gelatin capsules and HPMC capsules, they make a bunch of other variants of gelatin capsules as well, which they can be like shiny capsules और लाइक स्वीट कैप्सूल्स जो लाइक बच्चों की दवाई के लिए होते हैं, या फिर जो प्रिंटेड कैप्सूल्स रहते हैं अगर किसी फार्मा कंपनी को उनका ब्रांडिंग लगाना है, उनका लोगो लगाना है तो वो भी बना के देते हैं। तो मतलब ऐसे टाइप के प्रोडक्ट्स हैं वो लोग के जो कैप्सूल इसमें आते हैं। सो नेचुरल कैप्सूल्स का आप रेवेन्यू देखोगे तो 80% रेवेन्यू उनका डोमेस्टिक मार्केट से ही आता है। सो जो डोमेस्टिक फार्मा कंपनीज है या तो वो डोमेस्टिकली बेचते हैं या जो एक्सपोर्ट करते हैं उनको बेचते हैं, उनका 80% रेवेन्यू डोमेस्टिक मार्केट से आता है, and the remaining 20% comes from the export market.
Right.
So in the export market, their largest market is Africa, where we can see in FY23 almost 40-43% of this 20% came from Africa.
Right.
So like in Africa, they export to a bunch of companies like Algeria, Egypt, Ghana. Apart from that, they also export to the Middle East, Middle Eastern countries like Iran, Iraq, Kuwait, UAE, and other Asian countries, like Bangladesh, Nepal, Oman, Philippines. उसके बाद apart from that they also export to South American countries like Brazil, Ecuador and Peru, and some CIS countries like Turkey and Uzbekistan. North America में they sell to Canada and Mexico but not to the USA yet.
Right.
So this is the major geographical breakup of their revenue.
But that was not the case historically. About that we will discuss going ahead in this video, because right now उनका सिर्फ 20% का जो रेवेन्यू है वो एक्सपोर्ट से आता है, but one point of time they had about 60% dependency with the single country, and that actually impacted their overall business model, and then how they recovered from that phenomena हम आगे जाके इसके बारे में डिस्कस करेंगे.
So now if we actually get into the history of the business, Natural Capsules as a company was started in 1993 with a facility in Bangalore. So in this Bangalore facility they had like a building area of about 3,750 square meters, right? So in 2003, there was another capsule company in India which was going through a bankruptcy process, and they had a facility in Pondicherry. So Natural Capsules actually purchased this facility from the debt recovery process, which was a much bigger facility than their Bangalore facility, right? So in 2003, they had a capsule manufacturing capacity of 1 million capsules per annum. Then from 2003 to 2013, they took their capsule manufacturing capacity from 1 billion capsules to almost 7 billion capsules per annum. So this was the story from 2003 to 2013. Then in 2014, there was a major crash in oil prices. Like US significantly, increased their output of shale oil, and there was a slowdown in the global economy as well. Because of this, there was almost a 50% correction in the price of oil. And a lot of these African countries who natural capsules used to export to, they were actually oil exporters and they were dependent on, like oil. So at that time, a lot of these African countries were finding it difficult to get their hands on foreign reserves, on their forex reserves. So they were not able to pay the company, and there was a big slowdown, in the company. At that point, almost 60% of their revenues came from Nigeria, which is a single country. So post this, natural capsule shifted their strategy and they said that now, we are going to focus on the domestic market in 2016, what they did. Right. And what happened then is key demonetization happened in India. And then there was GST in India, and a lot of these small pharma companies which were their clients, they also saw like a downturn in their business. Right. So because of this, there was a major disruption in the company's business from 2014 to almost 2017-18. Right. And this is, like reflected in their margins as well, where we can see in 2012 they had an EBITDA margin of almost 25%. And in 2018-19, it was almost 10-8% margin which they had. Right. So then in 2019, what the company decided they are going to do like a major technological upgrade. So they collaborated with this company called DBDS Robotics Private Limited. So this is a company that manufactures capsule manufacturing machines. So Natural Capsules, in a joint development effort with DBDS Robotics, they developed a machine which can manufacture 5 million capsules per day. Up until that point, Natural Capsules had machines which could manufacture 1.5 million capsules per day. But now these new machines, they could manufacture 5 million capsules per day. So if we look at the financials of the company, it went from like they had almost a 1 crore net profit in FY20. And in FY23, they had an 18 crore net profit, right, which is almost 18x.
Right. Right. So I think here the learning is the companies which have very excessive dependency on the export, that also can be a challenge, and I have observed that in many such different scenarios. And generally I have seen like the companies which can do very well into the domestic market or US market generally does the business over the period of time quite well. But if they have the dependency on this African or probably Nigerian or say South American countries, then the business can be challenging because the receivable also can be a very high at one point of time. That is one risk. Second risk could be the currency risk. So generally the learning is one should try to avoid the companies where the export risk is quite large. In current situation also, like in Europe or in US or in other different geographies, inflation is quite high compared to India. And I think that's why if we focus on the domestic markets, first thing is like they are quite protected because compared to other geographical issues. Second thing is domestic demand is quite vibrant. Currently also in this worst situation which is happening globally, Indian demand is quite intact. And third important point is scuttlebutt, which we cannot do for the export based opportunities, but we can definitely do the scuttlebutt because we are mostly into the small and micro size companies for the domestic opportunities. So these 3 points one should understand, and then only they can decide कि ये जो companies है इसमें invest करना है या नहीं. Is whatever videos I have created on the Value Educator channel, none of it is a investment advice. आप आपका जो खुद का research है वो कर सकते हो, and then you can decide कि इसमें invest करना है या नहीं. This is just the platform where we are sharing what we understand out of our research, and that may help you to understand the company in a better way. So let's continue with the Natural Capsules का business model and what products they are into, and we'll also discuss about the competition, what size of competition is there in this industry.
So these new machines that Natural Capsules put in, they were like fully automated machines, right? So this helped them save a lot on their manpower costs. And Natural Capsules has said that these 5 million per day machines are the fastest machines in the world. Even their competitors do not have these machines. So there is two major costs in the manufacturing of capsules. So one is your raw material cost, which affects all your competitors equally, and the other is your power cost. So these new machines that Natural Capsules put in, management has said that it reduced their electricity usage by almost 33%, which was like a big savings in cost. And the other thing was these machines were way more efficient. Like before they installed these machines, they had a rejection rate of 8%, but these new machines only had a rejection rate of 3%. So So these new machines help them bring down their cost of manufacturing, which actually helped increase their margins. Like if you look at their margins from 2019 onwards, like there has been a steady increase in margin year on year. Right? Management has said that they have an agreement with DBDS Robotics that they are not going to sell these machines to their competitors as long as Natural Capsules is buying them. So management has said that they are protected from the competition at least for now. So here we can see their power cost as a percentage of revenue has reduced significantly since the past 3-4 years. Like when they installed these machines back in 2020, the power cost as a percentage of revenue was almost 15%, which is almost half now. It is at 8% currently in FY23. So they have done a big savings in terms of costs, and that is why their margins have increased significantly over the past 3 years.
Right. So when one understand or try to understand a different business model, the technological capability of a company can also play a significant role. So you have to find out some entry barrier or some niche into a particular industry where due to technology, if one can disrupt or create some entry barrier, so that is also one point one should remember. This is just one point in Natural Capsule. We will also discuss about what are the advantages or what are the opportunities for this company and what can be the threats or what can be the negative points about this business. But one should understand that technological capability also can be a very big differentiator that has played in companies like Moltech Technologies. I have created a separate video about the Moltech Technologies. जो आप देख सकते हो. So let's continue with the Natural Capsules.
Right. So currently, if we look at their scenario, in FY21, Natural Capsules had a capsule manufacturing capacity of almost 11 billion capsules per annum. Right. And in FY21, they announced a big Capex plan of 38 crores where they will be increasing their capsule manufacturing capacity to 22 billion. So almost doubling their capacity in 3 years. So they have installed 6 new lines in their Bangalore facility. And this project is funded through a mix of debt and equity. So they have taken almost like out of the 38 crores, 18 crores is from debt and the remaining 20 crores the company has done from their internal accruals. Like if we can look at the timeline here, then they added like a gelatin capsule line in Q1 of FY23. They added one in Q2 of FY23. And they were supposed to add one HPMC line in Q1 of FY24. But they had some delays in that and that has not come online yet. But management has said that, there will be another line coming online in Q2 and one in Q3 as well. So when this Capex is complete, by the end of FY24, management has said that their capsule manufacturing capacity is going to be 22 billion capsules per annum. If you look at the competition, then Capsugel, which is a Lonza company, is the largest manufacturer of capsules in the world. So they have a capacity of 220 billion capsules per annum, which is 10 times the capacity of Natural Capsules, right? There is an American company called Qualicaps, which was acquired by the Mitsubishi Group, and they are also one of the larger players in the capsule shell industry, but their capacity is not public. Then there is a company called ACG, which is an Indian company, and they are the largest player in India. They have almost 50% market share. Right. So they have a capacity of 115 billion capsules per annum, so almost 5 times Natural Capsules capacity. Apart from this, ACG also supplies their clients with capsule filling machines and and other formulation making machines as well. So it is a bit more diversified business than just capsule shells.
Right.
Then there is another company called HealthCaps, which is a private company. And before Natural Capsules did this Capex, they were the second largest player in India. But currently, after this Capex, that makes Natural Capsules the second largest player in India after ACG. So HealthCaps has a capacity of 17.4 billion capsules per annum. Medicaps, which is a listed company, has a capacity of 6.7 billion capsules per annum.
Right. So if you understand generally mostly this manufacturing of the capsules is a commodity business. So the player with the largest capacity or which have the lowest cost of production at the end will have the better margins and they can actually survive during the downturn. So actually when one study the commodity business, one has to understand two things. First is कि उनकी बैलेंस शीट कितनी लेवरेज्ड है एंड सेकंड थिंग कि उनके पास कितना बड़ा कैपेसिटी है और उनका कॉस्ट ऑफ प्रोडक्शन कितना कम है. जनरली आप देखोगे तो दीज आर द वेरी इंपॉर्टेंट टू फैक्टर्स when we are analyzing any commodity business.
Right. So speaking of capsules, now like capsules are like a widely used oral solid dosage. Oral solid dosage मतलब like जो मुंह से लेने वाली दवाइयाँ, right? And doctors prefer prescribing oral dosages because it is easier for patients to stick to their treatment regimen. Like for आपको कोई बीमारी हो जाएगी and doctor prescribes an injection, then that is something that a patient cannot take himself. He has to keep going to the doctor. So there is less chance of patients sticking to their treatment regimens when they are on more of these specialized medicines and stuff. Right. So doctors always prefer to prescribe like oral dosages which is easy for the patient to self administer, and that is why dosage forms like tablets and capsules will always have demand. The margins in them is like a question, but the demand will always be there because they are so easy to manufacture. The margins may not be there, but the demand for capsules is always going to be there. And if you look at capsule shells, they are made from gelatin, and gelatin is like a very it's a jelly like substance which is like translucent. It has no flavor, and it is made from like the bones or the skins of like animals, like mainly like pigs or cows or fish. Apart from that, the company also makes HPMC capsule. HPMC is a vegetarian capsule, so it is not made from animal sources. It is made from plant sources, mainly the pine tree. It is made from wood pulp. Right. HPMC stands for hydroxypropyl methyl cellulose, and HPMC capsules there isn't a lot of domestic demand. So the company has said that most of their HPMC capacity is going to be exported. The thing about HPMC capsules is that the margins are a little better, like 10 to 15% better than gelatin capsules is what the management has said. And that is why they are expecting a 3 to 4% increase in margin as their HPMC capacity comes online. But the main risk in HPMC is that the raw material, which is HPMC, is not domestically available. Right. Gelatin is a substance that is abundantly available in India. It is made from cattle and like fish and all of that. And the company does not have any import dependency for gelatin. But HPMC is a thing जो India में नहीं बनता है and the company has to import it. So यहाँ पे company का import dependence बढ़ सकता है. So that could be a risk going forward.
I think Sigachi Industries जो company है, they also have the similar raw material, right. And they also have the import dependency risk. I think they are also into the excipient which are required for the pharmaceutical industry. So we have to understand about the import dependency risk company के लिए क्या है, raw material abundantly available है क्या raw material का fluctuation है in the prices. So these things are also important while we are analyzing any particular company.
Right. If you look at the clients of the company majorly serves, like the domestic pharma companies. They have, marquee clients like, Abbott or Ajanta Pharma, Glenmark hai, Microlabs hai, Pfizer hai, Strides hai. So, Aurobindo hai. So, a lot of these domestic pharma companies are where the company gets most of its revenues from.
But one thing one should understand is that the cost of manufacturing a capsule or the selling cost of that capsule is very, very small compared to the entire final product, which is the final end of the capsule. So that's why जो company, जो formulation company है, जो ये capsule manufacturers से capsule खरीदती है, so they don't try to switch their suppliers or their vendors, because if they are changing the suppliers, then जो dossier files रहती है, उसमें भी उनको वो change करना होता है, and that can be a tedious process. इसीलिए यदि आप देखो तो ये industry में नए clients को onboard करना can be very, very difficult. And due to that, natural capsule जैसी जो companies है उनकी जो growth है, I am talking about the revenue growth, वो generally existing client जब नए कुछ products launch करेगा उनसे ही आएगी. नए clients को acquire करना can be very difficult because there is a very high switching cost. Currently जो formulation manufacturer है वो generally कोई नए capsule manufacturer को onboard नहीं करेगा because capsule की जो cost होती है in entire drug या final formulation product उसमें वो काफी small होती है, and that is the reason they don't want to switch.
Right. So if we come to like the manufacturing of capsules, like capsule manufacturing is a very, like Shashank said, it is a very commodity product and there is very little product differentiation. Most of the capsule manufacturers, they offer the same products. Like it is not a lot of differentiation or technology that is there in manufacturing of capsules. So ACG, which is the largest company in India, has a 50% market share, and it is going to be difficult for natural capsules to become the number one player in India because like अगर उनके जितना capacity natural capsules ने लगा दिया तो the prices of capsule shells will crash because there isn't that much demand in India. Right. So the chances are that it's going to be a steady growth from here as the industry grows. But there is very little chance that Natural Capsules becomes the number one manufacturer in India for capsule shares. So this is an industry where nobody has a technological advantage.
Right. So when we understand or try to understand the commodity business, then right point or right time to invest in these companies is basically when they are going through a very bad phase. क्योंकि ये पूरा सप्लाई डिमांड का गेम है. When there is a excess supply, when कंपनी के margins lowest हो गए historically, then that is actually a very good time to invest. But again one have to understand that कि ये कोई secular business नहीं है कि आज आप उसको खरीदोगे एंड प्रॉब्ली यू विल होल्ड इट फॉर 3-4-5 years एंड अंडरस्टैंड रियली वेल कि यहाँ पे सप्लाई डिमांड क्या करंटली चल रहा है, क्या प्राइजेस है, कुछ नया कंपटीशन आ रहा है क्या, या एग्जिस्टिंग जो कॉम्पिटिटर्स है क्या वो एक्स्ट्रा कैपेसिटी ऐड कर रहे हैं. इफ दैट इज द केस, आगे जाके सपोज प्राइजेस फॉल हो जाते हैं, देन देयर कैन बी द इमीडिएट इफेक्ट ऑन द प्रॉफिटेबिलिटी एंड रेवेन्यूज. वॉरेन बफेट एक्सप्लेन दिस कंसेप्ट इन अनदर वे विद रेफरेंस टू द टेक्सटाइल बिजनेस. तो वो ये कहते हैं कि सपोज आप एक मैन्युफैक्चरर हो आउट ऑफ द टेक्सटाइल इंडस्ट्री एंड आप कोई नई टेक्नोलॉजी लेके आते हो, देन फॉर सर्टन पीरियड ऑफ टाइम आपके जो मार्जिन्स है वो काफी बेटर हो सकते हैं कंपेयर टू योर कॉम्पिटिटर, बिकॉज आपका कॉस्ट ऑफ प्रोडक्शन कम हो जाएगा, जैसे कि नेचुरल कैप्सूल्स का हिस्टोरिकली हुआ था विच वी हैव सीन इन द ग्राफ. बट सपोज आपके बाकी कॉम्पिटिटर्स भी जो है वो सिमिलर टेक्नोलॉजी को अडॉप्ट करते हैं, देन एक्चुअली यू विल अगेन कम टू द सिमिलर लेवल, बिकॉज देन जो मार्जिन है वो तो पहले फॉल हो जाएंगे बिकॉज इंडस्ट्री में ज्यादा सप्लाई आ जाएगा एंड उतना डिमांड नहीं है. सो फाइनली सप्लाई एंड डिमांड विल कम एट द वन कंक्लूजन, और जो मार्जिन इनिशियली शॉर्ट पीरियड ऑफ टाइम के लिए बढ़ गए थे, दैट अगेन कैन कम डाउन टू द नॉर्मल लेवल. सो एक्चुअली द राइट पॉइंट टू इन्वेस्ट इन दिस कंपनीज इज व्हेन द मार्जिन्स आर नॉट सो ग्रेट and provided that due to some triggers आगे जाके margins better हो सकते. It is not very easy to invest in these commodity companies. Generally that's why we at a value educator try to avoid maximum commodity companies, क्योंकि वो cycles को pick करना, right time पे entry करना, right time पे exit करना, it is very very difficult, and that's why it is better for us to invest into some secular companies जहाँ पर जो cycles होती है वो थोड़ी elongated होती है, या at least 5-6 साल की cycle होती है, instead of commodities में probably it can be 2 to 3 year cycle also, and maybe lesser depending on the external situation.
Right. So अभी भी you can see कि वही situation चल रहा है in this industry.
Right.
Where like कोविड में डिमांड अच्छा था तो नेचुरल कैप्सूल्स ने बड़ा कैपेक्स किया, बट सिमिलरली उनके कंपेटिटर्स ने भी थोड़ा बड़ा कैपेक्स किया हुआ है. सो करंटली मैनेजमेंट हैज सेड कि थोड़ा ओवर कैपेसिटी है इस इंडस्ट्री में, and it is going to take 2 to 3 years for them to, for the industry to absorb this kind of overcapacity. And that is something that, we have started to see in their financials in the past 2 quarters, which we will get to eventually. So now we can see that there is a big shift happening in the business. Until now, Natural Capsules was, an empty capsule shell manufacturing company, and now they are entering into manufacturing of APIs. So management ने बोला है कि in 2018 they decided that they want to enter into manufacturing of APIs. And they said that they will be manufacturing steroidal APIs through the fermentation route. So management said that, they had started R&D on these products in 2018 itself. And in 2020, the government came out with a PLI scheme for API manufacturing, जहाँ पे 3 of these products qualified. So under this scheme, Natural Capsules will also get PLI incentives after they start manufacturing of these products. So for the manufacture of these products, they have set up a new greenfield facility in Tumkur, which is close to Bangalore. तो यहाँ पे मैनेजमेंट ने बोला है कि दे आर सेटिंग अप एन एंटायर इंटीग्रेटेड फैसिलिटी. तो यहाँ पे फर्मेंटेशन भी होगा एंड सिंथेसिस भी होगा. So if we look at the products that the company is going to be manufacturing in the API vertical, management has said that they are going to be starting with 4 products. So they have hydrocortisone, dexamethasone, betamethasone and prednisolone. So ये जो products है ये ज़्यादा करके चाइना से ही import होते हैं. And currently there is no domestic manufacturer for it. So what Natural Capsules idea is that they are going to be doing import substitution for these 4 products. Right? From these 4 products, hydrocortisone has not qualified for the PLI scheme. But the management has said that there is good domestic demand for this product, so they are going to go ahead and manufacture these. And the other 3 products have qualified under the PLI scheme. So if you look at the import of these products into India, so in their investor presentation, they have shown that almost 11 metric tons का import हुआ था in India for dexamethasone in FY23. And management has planned a capacity of 10 metric tons. And they have said that there is no other domestic producer for this product, so they are going to be the sole domestic producer. It is a complete import substitution. Similarly, for betamethasone, there was an import of 25 metric tons in FY23, and Natural Capsules has put a capacity of 12 metric tons, and for this product also they will be the only domestic manufacturer. Then for prednisolone, there was an import of 40 metric tons in FY23, and they have put up a capacity of 15 metric tons. So management has said that in FY24 they will start with the manufacturing of hydrocortisone and prednisolone, and then 6 months later they will start manufacturing betamethasone and dexamethasone. So management in an interview said that this is a complex process for manufacturing these APIs, where he has said that it is a sandwich process where it starts with like one round of fermentation and then 8 steps of synthesis. Then again there is one round of fermentation and then there is 3 or 4 rounds of synthesis. So management has said that this is a complex product to manufacture, and they will be the only domestic producer making this product through the fermentation route. So if we talk a little bit about fermentation, making APIs through the fermentation route is a little bit more complex than making it through the synthesis route. Fermentation is used to make APIs for like a lot of therapeutic areas like antibiotics and steroids and hormones and like some oncology drugs as well, some diabetic drugs as well. And if you look at India, we are completely dependent on China for fermentation based APIs for some like very critical drugs. So India actually used to be very strong in fermentation APIs back in the 80s and early 90s. Then in 1995 the government introduced a drug price control order, which is where they had set like a ceiling price for drugs. And what happened at that time was that API costs were a little lower in China than they were in India because of the lower labor costs. So Indian formulation companies resorted to importing the API from China, and because Indian API companies were not cost competitive, right, they went out of business. So today we are in a situation where for fermentation based APIs we are completely dependent on China. Then COVID happened, and during the pandemic the government realized that okay, there are some life-saving drugs which we are dependent on China, and they identified 58 critical APIs where we are dependent more than 50%, and in some APIs we are dependent 100% on China.
Right.
So for this they introduced like a PLI scheme of almost 15,000 crores where 29 products were fermentation based APIs and 29 products were synthesis based APIs. So Natural Capsules has basically qualified for the fermentation based API PLI benefits. So for APIs they are going to be doing a Capex of almost 130 crores, right? This is the Capex that they have planned until now, and management has said that post the commercialization of this Capex at full capacity, they can generate 2x asset turns from this investment, right? So to fund this project, they are going to be taking some debt, and also, they have raised some funding in the subsidiary, which is Natural Biogenics, right? So almost 48 crores of this 130 crores is funded through debt, and 20 crores is infused from Natural Capsules. So in FY21, they had done a rights issue of 21 crores, which has actually been infused into the subsidiary Natural Biogenics. Apart from this, they have raised 25 crores from HNI investors and 50 crores from like a private equity fund called Somerset Indus Healthcare. So this is the 130 crores ka breakup, how they will be funding the Capex. And management has said that the commercial production for the APIs will begin from Q4 of FY24. So the management has given sort of a guidance on what kind of margins we can expect from the API business. And they said that, like if we sell the product in the domestic market, then we can expect almost 10 to 12% margins, EBITDA margins from, these APIs. And if we export it to the ROW markets, then, we can expect somewhere around 15% margins. If they sell to the regulated markets through distributors, then they are expecting somewhere between 15 to 18% margins. And if they sell in the regulated markets directly, they are expecting 25 to 27% margins. And this is the plan that the management has over the long term. They have built the API facility, in compliance with US FDA regulations, and their eventual plan is to, export these APIs to US and Europe, where they will get a much better pricing. Right. So management has said that the raw material for this, for these APIs is phytosterol, which is abundantly available in India. But that is not how they are going to start manufacturing of these products. Like initially, when the plant is set up, they will be importing advanced intermediates from China, and eventually they will do a backward integration where they will completely remove their China dependency.
Right. So, but another point, Varun, which I would like to discuss here is that the management doesn't have the background of manufacturing any pharmaceutical drug or API or a formulation or any intermediate. It is currently a capsule manufacturing company. So going towards manufacturing of API might be challenging. We have to see what competency management have, what team they have created. So this can be the risk on the execution part, and till now also the execution on the capsule side itself was not that satisfactory. We'll discuss about that going ahead in this video. But we have to be very, very cautious, and we have to wait actually what kind of execution management able to do on a API side, because it's a completely new business for management itself. And I think if you check the history of the management or the background of the management, so the management don't have the much technical basically a background. So that also can be a challenge to ramp up or properly execute this quite a large capex, because 130 crores they are investing. So it's a very, very large capex for such a small size of company.
Right. So the company has actually qualified for the PLI scheme like we discussed before, and management has said that over 6 years they are going to be getting a benefit of 67 crores. So they are going to be doing a capex of 130 crores and 67 crores का उनको PLI से benefit मिल जाएगा. So management had initially said that they will opt for the PLI scheme from FY24, but उनका plant online आया ही नहीं, and then it is going to be coming online mid of this year. So they said that we are definitely going to have higher volumes in FY25, and the incentive is volume based, your production volume based. So they said that we are going to be opting for the PLI scheme from FY25. So they are going to be getting a benefit of 67 crores for 6 years from FY25 to FY30. So if we look at the future outlook of the company, what is going to happen going ahead, then at the end of FY23, the company signed a distribution agreement with a large company in Mexico. And management has said that Mexico there is a high demand for imported capsules as well. And they said that the revenues from this deal is expected to start in Q2 of FY24. So this quarter, maybe we can expect something from this deal. Then post commercialization of the HPMC lines, management has said that margins can further improve from here 3 to 4%. And these HPMC capsules will be completely exported because there isn't a lot of domestic demand for these products. The other thing management has discussed is there is a possibility of setting up facilities abroad as well. Like capsule is a very commodity product, and it is something where it is better to be closer to your customer. Like even if you look at their business, most of their 80% of their revenues comes from the domestic market itself. So they have said that if there is an opportunity, they are open to setting up a facility abroad as well. Their other competitor ACG already has capsule shell manufacturing capacity in Brazil as well as Croatia.
Right. I think same is the case with the Lonza also, because Lonza itself is a global giant into the pharmaceutical industry.
Right. The other thing the management discussed is about a 7.5 million capsule per day machine, right? So management has said that they have developed this machine in collaboration with DBDS Robotics, but they are not going to be deploying that machine in India because India they don't need such large batches, and customers need, customization, different colors and different things where this one. So they don't have need for such large batches in India. So they are not going to be deploying this machine in India. But management has said that they might deploy this machine if they ever decide to do a capex in Europe, because management has said that there isn't a lot of demand for customized products in Europe. They either need, white capsules or translucent capsules. So for that, they might deploy this 7.5 million machine, which can give them better margins. The other important announcement that happened this quarter was, their small scale plant, their plant which was inaugurated just a couple of weeks ago. The last week of September is when, they inaugurated this. And management has said that, the large volume plant will come online in Q4 FY24. Initially, they have guided for, a 50 to 60 crores revenue they are expecting from the API business in this year. But it seems highly unlikely because, the small scale plant was just inaugurated. They don't have, the manufacturing license for it yet. Uske baad customer validation bhi hota hai API mein. So it could take a while for, the revenues from the API business to actually start coming in. Then management has said that after steroidal APIs, they are also looking into entering hormonal APIs, which would sort of be like forward integrating. So that is also a possibility, but again, there could be a 3 to 4 year ramp up for just the steroidal APIs, and then, the management will think what to do next.
Right.
If you look at, their EC report, which they have filed for, the Bangalore facility, then they have taken an approval for 26 products, apart from just the 4 products that they are going to be starting. So they could start manufacturing either of those products in that facility. They have the approval for that. if you look at the financials of the company, then we can see that over the past 3 years, the company has grown very steadily, quarter on quarter growth. But we can start seeing weakness in the business over the last 2 quarters. Like Q4 of FY23 and Q1 of FY24 was the first time, there was a degrowth in the company revenues. Like it fell from 45 crores in Q3 to almost 37 crores in Q4. Similar story, in the margins as well for the company, gross margins, EBITDA margins are also falling. So management said in Q1 that, there was a gelatin supply issue that they faced. Like the domestic manufacturers for gelatin were undergoing a maintenance Capex. So they had to import gelatin, which was again higher cost, which affected their margin is what the management has said. In Q2, what the situation is, we are going to have to find out after the results. But one important thing to note here is like you have to look at the receivables growth for the company. So FY22, the company had a revenue of 135 crores, whereas in FY23, they did 172 crore revenue. So this is almost a 26% jump in their revenue. But to get that 26% jump in revenue, their receivables doubled. So they had a 26 crore receivable in FY22, which was 52 crores. So that is 100% growth in their receivables. So there is a possibility that, they are aggressively booking revenue.
So here one point I would like to add. So whenever we are analyzing any companies or investing in any companies, it is very important to know how well the company has managed its working capital and what are the receivables over the period of time, because it is very easy to show the revenues, but it is very difficult to collect that cash. So whenever there is a least amount of receivables, that these type of companies generally I prefer, revenues might be a bit slow, but in future there shouldn't be the large write-off because of the higher receivables today and probably higher revenues. But once that write-off comes, then actually the situation goes for a toss, and that's why I prefer for the companies where the receivable risk is very minimal, and for me that has actually played out very nicely. So understanding the working capital, how it is funded, how much debt they have taken for the working capital is very, very important to understand any company. And I think in Natural Capsule, that is the one red flag. And that is the reason probably I will be avoiding this company, at least at these valuations. But if valuation comes down, then I might think later. But at this point of time, at this valuation, with this risk, I think it can be a bit higher risk for me to take the position in this company.
Even if you look at their CFO to EBITDA for the last 5 years, it is only like 37%. So what this means is like over the past 5 years, the company has only been able to convert 37% of their EBITDA to cash flows, right? So because most of their cash is actually getting stuck in the working capital, like receivables and inventory. And the problem here is that, they are entering into the API business now. And the working capital cycle in an API business is also much worse than the capsule business. Absolutely. Like you can look at like any of the API players, whether you look at like a very large player like Divi's Labs, who mainly operates in the regulated markets, or you look at like a very small player like Copran, who operates more domestically and in the export ROW markets. Like the working capital is stretched for all the API players. So this entry into the API business is not going to improve their working capital situation. It is in fact going to make it worse. So that could be a little bit worrisome here.
Right. Like I think for the Divi's Labs also, the inventory days is more than 300 days. Yes. Being such a great company, such a large company, having the best of the best clients, but I think the working capital situation in generally API business remains very elevated. So that is the risk generally for the smaller companies.
So now coming to debt, like the company was completely debt free in 2018, and now, they have embarked on this Capex, 2019 onwards, and we could see the debt slowly rising up, like year on year, it has ramped up to almost 97 crores in FY23. So debt to equity currently stands at almost 0.8 times, and the revenue from the API business could be a little bit more delayed because, like the small scale plant just came online, the commercial volume plant might come online maybe end of FY24, maybe in FY25. So in a rising interest rate environment, this could also be a risk for the company where, the debt is very high right now. But compared to that, we can also see a good rise in the net block as well. Like net block was only 38 crores in FY21 and it is 97 crores in FY23. So there has been a sharp rise in net block as well. And currently they also have 88 crores in their CWIP. As the company sweats these assets and starts generating revenues, the debt will hopefully come down for the company. So now if we come to the risks that the company has. So the first risk is obviously that the capsule business is a very commodity business. That is, like we've discussed, there's no product differentiation. And currently the company has an advantage because they have the fastest machines in the world. But once, like Shashank said, the larger players also figure out a way to make this 5 million per day machine, 6 million per day machine, 7 million per day machine, I don't think it is that complicated of a thing to figure out. Maybe DBDS Robotics won't sell it to them, but whoever their supplier is, or whether they are developing this machine by themselves, they're eventually going to figure out how to make a machine that can manufacture more than 5 million capsules per day. And that is when the margins are actually going to fall for the company. Currently, the company is in a period where they have the technological advantage, but it can go away very soon as well.
Right.
The other thing, like Shashank already said, that the management has absolutely no experience in the API business. And, the management is not from a technical background. The MD is a CA, and he has said that, they have, set up a good team for the API business who have experience in steroidal APIs. But again, we have seen, there have been, many delays. The company is still working on, their yield for the commercial batches. And, so APIs in general, even API companies have, problems scaling up. Whereas, Natural Capsules is a company which has never had, experience in this field. And this is the first time they're doing it. So there could be, delays in the scale up, and we might not see revenues at all from this business in FY24. So that could be one risk. The other major risk in this company is the execution. The execution from the management has been very poor, to say the least. Like in FY21, when the company actually announced this Capex for the capsule business and the API business, they had initially said that in FY21, they will have a capacity of 24 billion capsules by the end of Q2 FY23. This was the initial target that the management had given. Then when Q1 FY23 came along, they said that we will be manufacturing 24 billion capsules, but it will come online by Q4 FY23. And by Q2 FY23, the 24 billion capsules became 22 billion capsules, and they said that it will come online by Q4 of FY23. And by Q4 of FY23, management has said that we will manufacture 22 billion capsules by Q4 of FY24. So there has been almost a 1.5 year delay, and the management has been in the capsule manufacturing business for the past 20 plus years. Right. So if they are having this much problem with, even the HPMC line, which was supposed to come online by Q1 of FY24, did not come online. And we have had no update from the management as such, whether it has come online in Q2 or not. So an API business is a completely different ballgame. And something similar has happened on the API side as well, right? In FY21, they had initially said that they will be investing 96 crores and, they will get 3x asset turns by Q2 of FY23. So at 96 crores, 3x asset turns is somewhere close to 290 crores, right? And now they are saying that, we are doing 130 crore capex and we'll get 2x asset turns. So that is 260 crores. So 290 crores ka 260 crores ho gaya, right? And 50 to 65 crores was expected in FY24. But, we are yet to find out, in Q2, we are going to find out if, there's going to be any utilization of the small production block and whether it's going to be generating any revenues in FY24. So there is one big risk where management has not executed at all. From the past 2 years, the stock had actually hit a high of close to 600 rupees, over 600 rupees in FY21. And since then there has been a huge correction in the stock because the execution has been delayed time and time again, quarter after quarter, Then there is an additional risk where in the beginning of the October month, there was a credit rating report from CARE Ratings, right? And in that credit rating report, they have mentioned that the expected capex for the API plant has gone up to 160 crores now. So the 196 crores, which became 130 crores, has now possibly become 160 crores. We're going to have to get some clarity from the management in the Q2 con call. But they have said that, this 50 crores that they had raised from the PE fund is now actually 75 crores that is raised from the PE fund. So there could be, even dilution in the subsidiary, where the PE fund takes a bigger chunk of the subsidiary. So there is one risk where, the execution has not been great. Maybe the management has miscalculated, the cost of setting up these facilities. And the other big risk that there is a big price correction in APIs. Like the API business is notorious for price correction, and management has already said that there has been a 10 to 15% price correction since they applied for the PLI scheme. So if there is any further price correction in these APIs, then it is possible that we may not even realize these 260 crore capex that the management has guided for. So those are the major risks that are there in the business.
So I think it's a combination of the quality of business and then later the management, because if the business itself is a very volatile, then it generally becomes very difficult for the management also to execute based on what is the external supply demand situation. So that one should understand, and more importantly, one should understand the valuations while taking any entry or exit in these kind of stocks.
Right. So that brings us to the valuation of this company. So currently, the valuations for the company seem alright because the stock has actually corrected 40% from its peak. Like the same stock, there was a lot of euphoria 1 year back, and because the management failed to execute, there has been like a 40% drop from all-time highs. Currently, the stock is sitting at close to 24 times PE and 2 times price to sales, 2 times price to book, and there is like a 14 times EV EBITDA. So right. Maybe the market is not pricing in the growth that can come from the API, But right now, the execution from the management is also like a key monitorable, like where if there is no execution, there could be a further fall in this stock. And currently with crude prices rising, there could be, like pharma companies could go through additional pain as well. So if there is another big correction in the stock from these levels, then maybe it could be an attractive opportunity to look at. But currently also there does not seem like a lot of value here, right, because the business is majorly commodity currently and the revenue from the API business could be delayed.
Right. So I have the absolutely similar opinion that, as I told you all earlier, that right now I won't be investing in this stock. But if suppose in future there can be a significant correction from these levels, I might think we have to understand the quality of business is not that great. So we have to have the comfort on the valuation point. When you have to create a large wealth in the market or find out the multi-baggers, then your entry valuation has to be very low and the execution has to happen. And then some other triggers like improvement in the margins or change in the revenue mix or probably operating leverage or some other things should happen. But entry valuation is very, very important thing when you are betting or investing in any particular company. So right now it is just wait and watch for me. I'll be watching this particular business for a couple of quarters. And if there is actually any disruption and further the price goes down, then I will take my call. So basically the reason to study all these different companies to understand what's happening into an industry, what is basically a business of capsule manufacturing, different excipient manufacturing, how it is related with the pharmaceutical industry. So we keep on understanding and learning more and more about different businesses so that when actually there is a time, we can take the positions quickly. You have to create your own database and create different buckets where you have to invest, where is basically your watch list, which are those businesses which you have to avoid at any cost. So when actually there is a correction in the market, then actually you should not start your research. Your research should be ready already. And then you just have to take the call and decide the position sizing, how you're going to build the position. That is generally my strategy. So we keep on researching about these small and micro size companies. And for the same, I have created a micro cap club where I generally share my research and scuttlebutt for various micro size and small size companies. We have created more than 50 reports in the club till now on various companies. There has been more than 15 management interviews. And currently we also have crossed 400 members in the microcap club. So this is basically the research platform where I share my research. This is not any advice or recommendation or any tips which we are offering. We are absolutely not in that business. So if you are looking for any quality research where actually you will get some insights of the scuttlebutt, we also take the club members for the physical visit of various plants. Then microcap club can be a very good investment for you. I have added the link into the description section and the comment section. You can check the more details about it. So like this video, I keep on creating various videos on small and micro size companies which are generally undiscovered small and micro cap company at 11 o'clock. So don't miss that detailed video.